Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.
Matt Justice here for Tackle Trading to give you the market recap video for today, Monday, August 17, 2015. You know what? Real light volume day today, as was yesterday in the market. The buying, the selling, there's just not a lot of participation out there right now. Not a lot of conviction. Honestly, one way or the other right now in the market, I think everybody's kind of just in wait and see mode. Nothing happened today that it doesn't continue the neutrality that we've been seeing recently. So let's kind of get right into it, looking at the S&P 500. We talked last week about how important the 200-day moving average is to the S&P 500 and really to every stock index. It's a buyer zone. It's an investor buyer zone, as you can see here, and it continued on today. Earlier today at 8:30 Eastern time, about an hour before the market actually came out, we got some news out of the New York Manufacturing Index, and I want to show you that because it was really interesting to see what happened today. And so obviously this is when the markets opened up last night, but coming around right here, 6:30 Mountain Time, that's my time, 8:30 Eastern, the manufacturing index came out with an abysmal manufacturing, really bad from a manufacturing perspective. And as you can see, the market really kind of dove down about 12 points. However, right after that, about an hour and a half after that, we got some positive news coming out of the housing sector where we had builders confidence move up to a 10-year high. And as you can see, obviously, with the market today, housing is more important than manufacturing. I do not believe that. I'm just saying that was the justification. And most pundits out there came out and basically stated that, you know what, it's basically housing is more important. Manufacturing is really volatile. And yeah, it's been really bad. You just got to love how they say that with anything perceived as a negative to the market. Oh, we shouldn't worry about that too much because of, it's really volatile. And yes, it goes down, it goes up fast, but it's really bad right now. It came in at a negative 14.9. The forecast was supposed to come in at right around 0.5. That obviously was a huge miss in the market. The NHB housing index came in at 61 out of 62, which was right around the expected. And to me, I'm looking at that and saying, okay, the forecast was 62. It came in at 61. And yeah, it's at a 10-year high, but it still missed the forecast. This market did not buy because of housing. I don't care what CNBC says. I don't care what Market Watch says. I literally can care less. This is a buy the dip mentality market right now, and it's sitting at the 200-day moving average. Got a technical bounce out of the market, and as you could see, it responded. Now the candle looks really big because of what happened this morning, but it's really up less than 0.5%. Ended up about 9 points in the S&P 500 itself. Moving on to the dollar index. The dollar index, I am a perma bull in many regards on the dollar right now, and rightly so. It's up 7% on the year so far, which is a big move for the currency. The emerging market currencies are really struggling, especially in light of what China did with the yuan last Monday night. And so, looking at this here, I do look at this as a neutrality type scenario here. It did double top here at around 98, and it's double bottoming right here around 96. We've been dealing with this for in the dollar for the better part since March, really, where you have some ups and downs, and I expect that to continue. But I do like the dollar right now in the short term over the next really the next 6 months or so. And when you forecast things, you have to be willing to come off that. And right now we are neutral in the dollar index, and we'll see kind of how that works out longer term. This week economically, that the economic reports that really can drive the market. building permits and housing starts tomorrow is really much more important than the NAHB housing market index that the market was really focusing on today. That is a very minor report, and that is why it's utterly ridiculous to hear the pundits on TV and in la land we call the internet talk about how important that is. And housing is vitally important, but there's about 7-8 housing reports every single month, and that one is literally one of the ones that nobody ever talks about. And so it's more of a justification than it is anything else out there right now in the marketplace. Building permits, housing starts later this week, coming in tomorrow, much more important. CPI report, the Fed meeting minutes, much more important. The Philadelphia Fed Manufacturing Index, much more important. The existing home sales on Thursday, much more important. And then coming in on Friday, Flash Manufacturing Index coming out of the PMI, coming in on Friday, much more important. So I'm looking at this as a minor report, nothing to see here. I could care less about what anybody in the market said, because you know who else doesn't care? Everybody in the market. It's just the reason that they give so they don't have to talk about technical analysis, so they don't have to go into in depth. It's lazy reporting by CNBC, Market Watch, Bloomberg, Reuters, and Wall Street Journal, and everybody else. When you point to a minor economic report that nobody really cares about, to say that's the justification for a turnaround that is at about a 1% turnaround in the market, which again isn't nothing too big. Let's look at crude light here. You know, the amazing thing is, in terms of crude light, oil's been getting slaughtered, but gas has been going up. Your guess is as good as mine, but that doesn't really work out long term. I want to look at this crude oil about, and let's just look at about 10 years of data here. And as you can see, this is the low price coming out of the subprime market. We broke here out of support right here at 42. You're currently at 41.86 in crude oil. The pain train is still happening. Crude is still coming down, and it's going to be interesting to see if this will continue. I certainly do believe it will. When the crude oil started coming down, I actually initially said it was right around $70-80, right back into this range, and I actually said that crude certainly could get down into the mid 30s, as low as 30 to 33. Some of that was based on this price movement all the way down here during the subprime, but there was just so much momentum on it. And looking at it right now, I certainly see it breaking 40 eventually. I do not think it's going to break 40 in this current go around. I mean, when you're looking at this thing is already so overextended to the downside. We're going from 61 all the way down to 41. You're talking about crude has got butchered over the course of the recent history here, and I see that continuing, to be perfectly honest. And so I don't think it's too shocking or radical to say that crude is going to continue to go down when that's what it's been doing. That should have an impact on all marketplaces. And look for those nice little people who don't understand anything to be posting on Facebook about how awesome it is with crude oil down, until another 100,000 jobs are lost in Oklahoma, Dakotas, and Texas as well. On the euro dollar here, the euro dollar, this is just commonplace. Anybody that's been listening to the Force Report, they know my opinion on the dollar euro. It's 110. 110 is so important for the euro dollar. And so as you can see here, it's just been hovering around there. It's been testing at support, testing at resistance. It's currently at 110.77. And in my estimation, anything above 110, you could go long on the euro. Anything below 110, you go short on the euro. I typically will look at short. Now, the Europeans, the trade surplus is starting to get a little better. They had some information come out of Greece where Germany is now supporting the bailout plan. It's never worked. It's not going to work. I don't think it works this time either. But at least there is some positive news coming out of there to impact price action. That was really kind of last week, with Greece once again in the headlines saying, "Oh, we got another bailout. We got another deal." I thought we were done with that a month ago. I thought we were done with that 2 months ago. I thought we were done with that a year ago, 2 years ago, and 5 years ago. Apparently, we're not. And like I said, this is going to be an ongoing discussion. 110 in the euro dollar. And the reason the euro dollar is so important to analyze, ladies and gentlemen, is in a $5 trillion industry, daily industry, This accounts for about 24% of all volume in the currency market. This is going to be a very important level at the 110 level. You cannot short the euro above 110. You just can't do it. I talked about that last week in the Forex report when it was above 110. I said I had to close 110, so we didn't really make a trade on the euro dollar in the Forex report last week because of that, and we're certainly not going to do it here either. A couple stocks in the news today. With the sell-off in China, you really got to fixate on some of the stocks that have, do a lot of business in China. Things like Apple, and obviously Apple's been getting beat up along with along with the Chinese market. Well, also another one that's even more does more business in China in comparison to their overall economic growth. Wynn Resorts, getting absolutely slaughtered here. Look at this from 205. This is what happens to growth stocks, by the way. 205 in less than a year, all the way down to $90. I do see that continuing as well. Another stock in the news today with an upgrade. My favorite stock in the history of the financial markets. No, that's kind of a little bit of a radical statement, but many people know how much I love Elon Musk and love what Tesla is doing, even if they don't show profits or revenues yet. I like how they're pushing it from a research and development company, and eventually Tesla's going to be like Apple, guys, and they'll become just a marketing company as well. For right now, though, coming down into the 200-day moving average, but today it got an upgrade with the price target around $370. My price target on Tesla for the last 2 years has been steadily at $330. I've came off it a little bit, I've increased it a little bit, but mostly I've came off it between the 300, 330 range, and that's where my price target is right now, between 3 and 330 in Tesla. And when you're doing price targets like that, guys, you're not saying in the next 6 weeks, you're saying eventually it gets into the 300 to 330 mark. Big upgrade for Tesla today, up 4.87% or $11.84. Another stock in the news, Urban Outfitters, came out with some good earnings, and as you can see, you can't see them right then, but you can see them right here. Good earnings on Urban Outfitters. This is going to gap in the morning. It had a positive reaction, went from 32 up to 35 before a little bit of a sell-off down into 34.3. I see this going up tomorrow, though. That shouldn't be too shocking. And this looks like some type of breakaway gap to the top side, breaking out of that resistance level right there, punching into this one here. That might be a play for the longer term as this has been coming down. So obviously reporting a very, very good earnings report is Urban Outfitters, and it should gap up tomorrow in the market as well. That is the market recap video for August, and I believe it is the 17th, Monday the 17th. This is Matt Justice for Tackle Trading. If you like everything we're doing over there at Tackle, guys, go over there. Get in the game one trade at a time. Matt Justice, Tackle Trading.
Get off the sidelines and take control of your financial future at www.tackletrading.com. Get in the game.